All right, so we're talking about the Bank of Canada announcement today. I'm going to say hurrah, I guess. Maybe. I don't know. Depends how you feel. Lou, tell me, what do you think? What do you think this actually means for Canadians?
Well, hurrah, yeah, to echo your sentiment. I don't think there's anybody that would say boo.
No, listen, I'll take a quarter if they're going to give me a quarter.
The opposite of hurrah?
I don't know, maybe.
I don't know. Yeah, it's good news. I think it's good news because it signifies the start of something.
Yes.
This in and of itself is not, for me, going to change too much for most people because, well, if you have a variable rate mortgage, at least now more of your payment's going to go towards principal than interest. So, it'll cut hopefully some months or even years if you have a larger mortgage off the mortgage. Mm-hmm. And yeah, you're going to save a little bit on interest if you carry a balance on a HELOC. But really...
But what,
Really, if you're in a variable rate, you were anticipating this, right? If you've stayed in a variable throughout this whole thing...
You were waiting for it to happen.
You're pot committed, as I've said in the past. And now you were decidedly waiting for this to happen. Mm-hmm. Or if you took a variable, like a lot of our customers did in, I want to say in the fall when the discounts were really good and this was on the horizon.
Yep.
Then this change really is just confirmation that, you did.
Yeah.
I don't want to say the right thing because who the heck knows what the right thing is, but
it's in line
affirmation
with the plan.
Of your plan. Yeah, exactly. So you aren't doing anything today other than a little,
you're saying, thank God,
okay, finally it started.
Yeah.
But really, it doesn't change anything for that individual. Mm-hmm. You know what I worry about? So the individual who's maybe up for renewal or needing a mortgage, and now are they going to be pushed more towards variable? I don't know. But really, what's this going to do to the housing market? Because we saw, was it last year? Yeah, last spring, when they just simply paused the increases. You remember there was that spike in the real estate market where it almost seemed like buyers were just waiting on the sideline and they jumped back in just for a pause, right? Does this do something similar or even more? That's I hope people don't go crazy again, with this.
Yeah. I mean, the way I look at it is, if they're, like I said earlier, if they're going to give me a quarter, I'll take a quarter, right? Any savings is good. It'll help put some money back in, consumers' pockets, right? But I don't think it's enough to make a difference, nor do I, they're not saying, hey, here's everything that we took back, right? But I think it shows, okay, there might be a little bit of intention to now actually move things down to more affordable levels, right?
Well, and that was the messaging, right? So it's not just the headline that, quarter point drop. It's the message behind it is the first of more to come in the future. Mm-hmm. So, I think that's important here is, the chances that by this time next year, it will be enough to make a difference.
Mm-hmm. Yeah. I mean, the other point that was made was surrounding further cuts in the future. I know they're talking about, yes, things should, I'm going to say, ease up. But when we think about what today really means in the grand scheme of things, I think we're happy to see the first step in the right direction. But I think we still have a fair bit to go before it actually makes an impact on affordability, number one, and people's ability to qualify for I'm going to say a number that they would probably need to maybe stay where they're looking to buy.
Yeah, how many more buyers does this bring into the market? Not a whole lot.
No.
I haven't sat down to do the math, but I think with a quarter point, it's like $15 to $20 per $100,000 savings. So it's, and that's $100 if you have a $500,000 mortgage per month savings, right?
Exactly.
So it's something. It's not life changing.
No, and that's pretty much exactly. Like I like to say it's $20 on, $200 on $1 million, right?
Yeah.
So
exactly.
Realistically speaking, I'll take $200 back so I can put it towards the gas or the groceries, but it's not enough to make a difference. Interest rates from when this all started have climbed significantly. And it's my opinion that if we really want, the Canadian economy to maybe find some stability, yes, but also giving something back to the everyday consumer, I think we need to see rates drop by, 1.5% on the variable in order to really see, something that makes a difference. I mean, if I got back $1,200 in my pocket from rate cuts, I'd be happy because it's what you took from me.
Yeah. Can you imagine if they did that in one?
No, they'll never do it in one.
Of course, but I'm just playing fantasy here. Can you imagine what a gong show it would be?
It would be.
You'd probably have like lineup at builder.
Yeah, people would go crazy.
Offices again.
Yes,
like you'd have.
But that's why they don't do it all at once, and that's the problem. People maybe they don't realize that if all of a sudden the government was on sale, what would happen? Money's coming back in. Just like you said, people would jump, they'd start spending again, which what happens? Cost of houses.
We'd be right back to this.
We'd be right back where we were.
This cycle in a couple of years.
Exactly. So I think they're doing the right thing by coming in slow and, giving us the first one to say, hey, we're coming off the brakes. And I love that sentiment. Someone said it earlier, this isn't us hitting the gas. This is us just easing off the brakes. And I think I'm happy that they did. I'll leave it at that.
Yeah, and they can't afford to screw up again, right? Like the consumer confidence is so low with how they handled rates since March of 2020, basically, right?
Exactly.
Made them artificially low and then got it wrong, basically, by telling us they'd be low for quite a while, and then the steepness of the spike. So the everyday person is right now their trust is a little bit
maybe
fragile.
Yes, but with today, I would say, okay, you had me holding my breath for a long time. I was almost underwater. We talked about that in past podcasts. Today maybe gave them just that little bit of a breath.
That's all it should give them, right?
Yeah.
Like any more than this, then we're right back to being irresponsible with policy. So
yes, exactly.
This is appropriate.
Yeah, I think so, and I would say I'm looking forward to July because I'm really hoping in July we get another quarter.
It'd be nice. Let's see. I don't know.
Listen, man, give me a summer gift. Give me a summer gift.
It'd be.
And send me on holidays happy,
nice.
Right?
Yeah, I think we could all use it. It would be nice. I'd love to see that.
Yeah,
but we'll see.
Listen, I mean, I you know me. I'm a numbers guy. I'm a stats guy. So I went back and I looked at when did they have the increases? At what point in time? And so if I'm a betting man based on the stats, I'm gonna say, give us another quarter in July, and then we'll probably not see something again until maybe late 2024, going into January 2025 to give us that 1% that they're talking about. I mean, I'd love to see 75 basis points again this year. I would love it. I think that would be a lot. I think it would be a lot at once, as much as I would love to see it.
But you think 75 by the end of 2024?
Yeah, I think come January 2025, we see another full 1%, getting us very close. But I don't see us getting there any quicker than that. It's just not realistic.
No, I don't think it's realistic. I don't even know about 75 beeps. I'd love to see it.
Yeah.
Let's see.
That's
what makes the job fun.
Yeah, this is.
If you're right, you look like a a godsend to your clients, right?
Listen,
if
the
you're
only
wrong, well, listen, I told you I didn't have a crystal ball.
exactly. I said if I magically no, but the big thing is, and talking about the clients, the conversations. The big thing was, we started having the conversations. We talked about the variable rate offerings on the podcast with Mike, going back about a month ago or whatnot. And, those conversations, I think, just finishing that off, those conversations are right in line with now exactly what's happening. And so, I think for anyone that was brave enough to take the variable with those really heavy discounts that were offered in the beginning, good on you. Because you made a bet, you took the advice, you looked at the data, and now you're reaping the rewards a little bit. So
yeah, you're starting to.
Yeah.
I don't want to say reaping because
you're getting
still not there yet, but you're like, oh, okay,
exactly.
It's like you're putting together your basketball team, right?
Mm-hmm.
Now you've got two of the pieces in place, so you're like seeing it come together. You haven't won the championship yet.
Yeah, all right.
But you're seeing the pieces come together at least.
Lou does a little bit of fantasy league, apparently.
I don't even watch basketball, to be honest with you. I use basketball because it's 5-a-side. It's easy. I don't know. We could use hockey.
All good. Anyhow, I think that's it for today. We'll take the rate cut announcement
and hope for more.
Hope for more.
Hope for having another discussion like this in July.
All right. Let's call it there.